Hello traders, this is ICT with the Pro Traders Club entry for March 6, 2011. Okay, we are looking at the 3rd of March and just a real quick review of the action. These are just some moves I monitored. I didn't take action in live trading, but the tools did come into effect, so we'll go over that now. Alright, we have New York midnight time delineated on the chart. Asian range going into new day, and we will throw a line on here real quick and show you what occurs with the Asian range. Okay, essentially what I've done is highlighted where the bodies of the candle, okay, and wicks majority have touched. Okay, I like to use the bodies of the candles simply because I think that's where the actual levels that are turning the candle are actually impacting the price data. Once in a while you'll get these inerrant wicks that for the most part, unless it's a very long, like this hammer here, then I'll use the low of that for something like that. But when there's a consolidation area or we're in congestion, I like to use the bodies of the candles. It just makes it a lot cleaner level, and I'm comfortable with letting price slip through these levels because, as we've already discussed, price doesn't work within black or white. It's always a gray area, so we have to have some flexibility in terms of what we anticipate in terms of market action. Okay, so price moves into a new trading day here, and we go back to the high of the Asian session range, and we start to trade lower. Okay, and this right now is a 15-minute chart. Okay, central pivot is here, so we are essentially in what level? The sell zone. And I'll bring this down just a little bit. R1 is, so between R1 and central pivot we have an R1. Okay, so we're in the sell zone, so let's go down to a 5-minute chart. Okay, this is that same Asian channel or Asian range. Okay, and we have railroad tracks here at the upper end of the Asian range. Price starts to trade back down to the lower end of the Asian channel and starts to bounce up in here. And since we're in a sell zone, okay, here's your 62 and 79% optimal trade entry for a possible short, and price trades down, breaks the Asian range low, and trades down to central pivot. And these two bands in here are a nice little level I like to look for in this, anywhere between this one and this one here. I use for possible targets. But again, I didn't trade this, but it gave you a lot of opportunity to get out in here. And that was pretty decent. I mean, if you went short and covered the short in this area in here, it's about 50 pips or so with spread. That's not bad. That was the London setup. New York, even though we had this consolidation and just kept reaching lower and lower and lower and lower, we were now below the central pivot, and New York open in here. Okay, so we look for a change in sentiment. Market had traded down. Okay, was failing to go lower. We were between central pivot and S1, so MS1. Okay, we get initial surge up to the pivot, broke above it just briefly, then traded lower as we traded back down, pulling the fib from low to high, 62.79, optimal entry. Okay. Now trading back up to, remember this Asian range low, trade back up to it. It will now act as resistance, which brings me to the key point for this Pro Traders Club installment. Whenever you have the Asian range, the high and low of the Asian session, these boundaries will provide future resistance and support throughout the rest of the day. Okay, so if you have taken a long in here on optimal trade entry going long, you could have recently taken 30 pips out as we traded back to the 163 figure, and then found natural resistance and traded down below the New York session opening support, blew out any stops, and then consolidated. And even London closed didn't really offer up much in terms of opportunity, which is the reason why I don't trade the last couple days going into non-farm payroll every month. Okay, looking at Friday, Asian session range. Okay, note this low here and this high in here. So as we trade softer into this is London open here. Okay, trades down weaker, and right in here. Just real quick, guys. I'm really behind in terms of catching up with the emails. I've got a lot lately, so I'm going to answer one of the guys that emailed me, Alvin. He asked me if it was a prudent trade. I believe he went long in this area here, and he second guessed himself, thinking he was rushing. And while it was non-farm payroll, with that excluded, this would have been a good trade by itself, yes, because you're below the central pivot, you're in the buy zone. We've been able to find support, and we did have a really tiny little micro failure swing in here. And if you would have run a fib on there, I'm not going to, but you can clearly see that it sets up optimal trade entry for a very small time frame. And then price trades back up to the pivot. Notice the central pivot is also basically the Asian range high resistance, and we had difficulty getting above that every time, and it gave you scalping opportunities for Friday, and trading back down to S1 for the day. Gave you minor little reactions, basically keying off of MS1 area. There's your hammer in here that's keying off of that level. Here it is again here. So you can start to see these levels, how they have impact on even on the short-term time frames, which will set up a swing or measurement for longer-term swings. So just because these major pivots are always on my chart, you always remember, like here, you have MR1 because you have central pivot, R1, in between there is the mid pivot. Okay, so that was basically the setup. Friday did give you a London close setup in here. Gave you a potential setup for a possible little scalp in here for 25 pips or so. You could have got that. But that was the session for Friday. And again, I didn't take any action. But hope that answered your question, Alvin. And I wish you good luck in good trading, guys. Okay, guys, Jim68. Thank you very much for that compliment. I see you're mentioning that you're going to go over the videos. If you haven't noticed, I'm updating them and making them high definition. I just updated the very first one, and the second, third, I'm going to add a couple slides too. That in hindsight, I wish I would have put in the beginning, but I'm still working on those. So by next weekend, we should have those up to date and in high definition as well. So yeah, I think you'll find they're pretty insightful. They're very short, but there's a lot of meat in them, and it has to deal with the proper mindset going into trading. So thanks for your compliments again, and I'm happy to have you part of the thread. Okay, Hordain, thank you very much for that, and you're welcome. Okay, George, hindsight, unfortunately, is the only tool we can have as neophytes coming into the market and trading. And much like anything, when you look at something that's already happened, history repeats itself. And if it didn't, bode well for future results, even though it's not indicative of future results, it has to be a disclaimer involved and everything, like you see in the beginning of these videos. We do it in sports. Everybody watches tapes and playbacks, and they try to learn from the mistakes and from their successes, and that's no different for trading. And it's important that you maintain consistency, and you find that by studying the past. So hopefully you'll arm yourself with the proper ammunition and the patience to unload on the market when it's time. All right, the simple man. Well, if you're in a 100 pip trade, take it. 100 pips is 100 pips. Don't wait around for it to turn around on you. I'm not sure what happened for your trade here, but I'm assuming you're still in it because I don't see anything in the thread to state otherwise. So whenever you get 100 pips, always try to take majority of a position off at that point. Okay, Northern Touch. Excellent trade. Very good. Very, very good. Even though you didn't catch the actual optimal trade entry point, you did get in line with the market dynamic, and you went long, and it panned out pretty well for you. I'm assuming you had a limit right here at R1, and I'd like to know if you felt that you could have left some in, or you just took everything off at the point of R1 touching and then being done for the day. If you could get some feedback on that, that'd be interesting to know what you were thinking. Also, if you notice on your chart here, this pull back down into this level right here, run your fib from this low to this high, and then study this price level right here. Look at your monthly, weekly highs and lows, and also note it's a mid pivot, and you also have, I think you'll find several confluences of support in this level right here. Also note that this high to this low, the extension right here, note where that comes in at, and you'll see that there's a projection that called for this low to this high. Bull flag formation, if you measure this low to this high projected from this low here, also has a lot of confluences. This is something to think about. Good trade though, very good. Okay, Hordain, I gotta squeeze your chart in here, so if it's small, I apologize. Yeah, chasing your stop up real quick. Whenever you have your position entered, whether you're trading off of just pure support and resistance, or if you're using optimal trade entry, you have to make sure that you're waiting. You have to use the high in this instance when you're running your optimal trade entry. When price trades above the reaction high you're keying from right here, when price trades above this point, that's when you move your stop to break even. Anytime you move beyond that, in terms of rushing, you're likely to get stabbed and taken out on the trade. I know in your mind you want to try to get to the break even as soon as possible, or at least tighten the stop up, but you have to give it some room. And unfortunately, that's how market structure works. Once you take out the highs, you wait for a fractal low, then you trailed up 10 or 15 pips below that on the 15-minute chart. Since we're trading on a short-term time frame here, you just simply have to wait for the fractal highs to get taken out. And since we're running optimal trade entry on the high, once it broke, that's when you move your stop up to break even. So just for future reference, use that as a general rule of thumb, and I think it'll serve you well. Very good though. You didn't lose any significant amount of money. So even though it was a missed opportunity, it was a learning experience. So very good. Okay, WRTM 19. Same thing applies here for you. I really like your attitude and your outlook on the fact that you weren't able to capitalize on a significant price swing, but you didn't lose any money. So that's it's a really good way of looking at it, and it's a good sign of development and professional outlook and attitude for trading. We're not going to win every one of them, and sometimes you're just going to have a good trade slip through your fingers, guys, and you have to be okay. And this is a perfect example of the proper mindset and how to look at it when it happens to you. Just chalk it up as a learning experience. And again, since it's now the past trade, it's your past trade. It can't make you any more or lose you any more. So just learn from it and move forward. Don't let it be an impediment on your future trades. Very good though. Thank you for that, Needy Pips. I'm assuming you're referring to Baby Pip's school, where you reference the three-legged concept. There's actually going to be some more tools and approaches to some of the future material, but I'm glad that you feel that you're getting your money's worth, no pun intended. Thank you for that. Just want to make a quick pit stop at the poll. Got 78 people suggesting that this thread has been very helpful to them as a new trader, and I appreciate that feedback. There's one person short of 100 voting. Unfortunately, I didn't live up to 7 individuals' expectations. Like trades, I can't win them all. And for those that are seasoned and have had some experience in this market environment for some time, we have 14 people suggesting it's also been a benefit to those that may be entering the market for the first time. So I appreciate all that. Thank you very much. Okay, same sentiment with Vonner. Very good outlook. Break even on any trade is a win in my book as well. So if it's not a loss, you didn't take anything in terms of a negative withdrawal from your account, it's a win. You didn't lose anything. So that's a very good outlook. Okay, AK. This is the star post for this week's feedback session. I am absolutely impressed with your mindset that you're expressing here. You kept yourself out of overtrading. You weren't chasing the market. You were completely content with staying out on the sidelines and keeping the 69 pips that you banked already, and feeling in control and gaining the confidence that you don't need to succumb to overtrading. That right there is a milestone in your development. So I tip my hat to you for that, because that is one of the biggest advances in your personal development that I can't stress enough, that you're going to see very good results by exercising that mindset, not just this week, but repeatedly. When you bank a nice chunk of pips at the beginning of the week, just simply because we have more time in the week and the market's going to be trading doesn't mean, by no means, that you should be taking trades. And you've proven it to yourself. And being sober-minded about it, and mature and not chasing the market, it's very refreshing for me to see that. And I'm looking for most of the individuals that are following this thread to have that mindset be adopted as well. So I am very impressed, and that was very, very good of you to share that with us, and for also to exercise and stay out of the market. So it's very refreshing to see that. So I appreciate that. Thank you. Um, yeah, I don't know about moving to the head of the class, but yeah, I don't want anybody thinking that there's a competition, because as soon as we start adopting that, that's where our feelings will start getting hurt, and emotions will start racing, and those that may be inclined to post will be fearful or embarrassed to post. So I understand what you're saying, but don't let this turn into a trophy chasing situation. Nobody's better than anybody else here. We're all trying to build the same mindset and approach the market in the same. So, but I agree, that was very good stuff in that post. Okay, Jim68. I believe I posted a response, and if that didn't satisfy, just state more specifically that you're looking for in terms of your question, and I will do my best, if not someone else in the post, and try to answer that for you. Okay, hello, goodbye. Thank you very much for that. You're welcome. The last two videos were kind of like a long-winded. I got into a rant and lost track of time. I wasn't sure if YouTube wasn't going to let me post that long of a video, so I had to separate the two videos. So in hindsight, I could have done it, but this just would have been a long session for you guys to sit through. So I appreciate that. Thank you very much. Okay, AK. Exactly. 50 pips, if you project that at over time, within, you say you got $5,000. I'm not saying you need to have 5,000, guys, but just say you had 5,000 in the account and you were trading. You can do as little as 16% return on your money every month, risking about 1.5%, and about 36 months that turns into over $1 million, and that doesn't account for taxation or withdrawals you may take buying a spouse their little toys or dinner. But you're going to see this happen this fall. I'm kind of like tipping my hand to you, and I know a lot of you guys know where I'm going with these trailers and these little teasers at the end of all my videos. 50 pips is really, I mean, you don't need much more than that to to be a millionaire. You need the time. You need the time. You need the consistency, and the will to just stick to the path that leads to your goal. And if it's $1 million that you're looking for, I think your goal should be more than that, really. And I'm not trying to incite greed. I'm just saying that what's going to happen when you get to $1 million? You're going to stop trading? No, you're not going to stop trading. You'll probably keep $100,000 in your account, and you'll trade that up. Once you get about $3 million liquid, and then you can go with a $1 million trading account, and then the sky's the limit. But you have perfect mindset right now. There's no rush. Being 24 years old, I started trading when I was around 23 years old. So I see a lot of young guys in this thread, and that's really cool. You're learning what I was really begging to find in books. I mean, I bought thousands of books, and I mean, if I could just have the money back I spent trying to chase the information I have now down, I'd be wealthy. So, it's very refreshing to see someone as young as you have this mindset. So I tip my hat to you for that. Well done, AK. Clint, I really appreciate your post here, and I'm very flattered that you would think that the video series at this point is as good as you're suggesting here, because again, we're just now starting to get to the meat of this stuff. There's a lot more to share, but to answer your question, no, that is not me in the trailer videos that I'm using for a teaser for the $1 Million Challenge and Sniper Trader in the fall that starts this year. I asked a friend to help me find a video sequence that had like a sniper type of theme to it, and this is what was given to me, and I've been splicing it up and editing it, and I think it was really cool. I love the guy's smile, and it just, to me, it exudes the whole mindset of how I trade and how I approach the market. So the guy looks a little older than I am, so it's no knock against those that are older than me, guys. But yeah, that's not me. But I think the video is really cool, and I'll probably change it up in a month or two. So it'll get, eventually it'll get stale if it hasn't already. But I liked it. I thought it was it personified my outlook on the market and how I trade it and how I attack those time frames of the day. So I appreciate your feedback and your support of the thread.
Get 3 coffins ready. Huh?
Adios, amigo. Listen, stranger. Did you get the idea? We don't like to see bad boys like you in town. Go get your mule. You let him get away from you?
See, that's what I want to talk to you about. He's feeling real bad.
Huh?
My mule. You see, he got all riled up when you fired those shots at his feet.
Hey, you making some kind of joke?
No. You see, I understand you men were just playing around, but the mule, he just doesn't get it. Of course, if you were to all apologize... I don't think it's nice, you laughing. You see, my mule don't like people laughing. It's the crazy idea you're laughing at him. Now, if you apologize like I know you're going to, I might convince him that you really didn't mean it. My mistake. 4 coffins.